All right, then, guys. Today's Monday, and in Singapore, it's the observed Labor Day. So the Singapore market is not open, but the US market is going to be open anyway. So let's cover some news today. Right. So first of all, we have to talk about US stocks future climbing after the worst month since 2020. And I'm pretty sure that like I said in my previous video about how possibly we have to go into recession period. People are getting a lot more fearful in the market. Clearly, last month was the worst month since we went through the pandemic recession back in 2020 of March. So that was actually quite bad. Similarly, for this one is April of 2022. We actually started to see a lot of bad catalysts up front. If you have missed my video on Saturday, you can check it out on my YouTube channel. I'll probably link it on the card somewhere in the corner of the screen. But yeah, I do think that recessionary fear is definitely here to stay. Concerns and worries is definitely here, which is why we do have to kind of worry a little bit more about what's going to be happening. Because of course, with FANG earnings out of the way, of course there's going to be a huge concern out of the way. But nevertheless, we still have to take those earnings into account. Because for those earnings, we have to look at Netflix, we have to look at Amazon, we have to look at Apple. All these are not really doing really well. Even for Google, Alphabet, it didn't really show superbly good results, but it was as good as it can be for a advertising play in 2022. The only good one that actually showed up was surprisingly Facebook, Meta Platforms. They actually went up by about 20% or so. However, that didn't really last. Meta Platforms actually went all the way to about $210. Right now, it's actually hovering back down to the $200 mark all over again. Even for Meta Platforms themselves, they are not doing exceptionally well themselves. All right, so anyway, let's move on with Apple. Apple abusing dominance in mobile wallets market according to a preliminary EU view. So I'm pretty sure that there's going to be a lot more of this, where these are all the antitrust litigation and investigation going on with all the monopolies level kind of company, which is your Apple, your Google, your Facebook to a certain extent, which I don't think is going to be that big of an issue because of what TikTok is happening at the moment. But yeah, sorry. Apple abused the dominance in the mobile wallet market. Right now, they are talking about how, because of how Apple has such a dominant position in the mobile wallet market, Apple is basically abusing it right now. But this is, of course, right now, these are still hearsay. Limiting technology used for contactless payment with mobile devices in store. Apple restricts competition in the mobile wallet market. I'm not sure how true it is, but that's not going to be good for Apple in the short run. But in the long run, I don't think that it's going to be that worrisome. Next up, we've got Nancy Pelosi leading U.S. delegation to Ukraine in show of support. Basically, the start of this was saying that Nancy Pelosi would give aid to Ukraine until they win or something along that line, which is why I kind of clicked it. Kind of cool. The U.S. comments came as Moscow military advance stalled, and Russian official blamed a saboteur for an attack inside its territory. Our delegation traveled to Kiev to send an unmistakable and resounding message to the entire world. America stands firmly with Ukraine. Ms. Pelosi and the members of Congress who traveled with her, all Democrats, said in a statement after their Saturday night meeting with Zelensky. Zelensky conveyed a clear need for continued U.S. security, economic and humanitarian assistance in Ukraine's fight to repel the Russian advances. I'm sorry. Anyway, so the thing about the whole Russia-Ukraine situation at the moment, I do think that it's a little bit weird because right now I'm looking at Occidental. Okay, of course, I should be looking at WTI for better understanding of how the oil prices are working. But if I look at Occidental Petroleum, right now Occidental is about $54 or so, kind of going down a little bit. Even for WTI, they're actually hovering about $101. So I do think that oil prices is definitely going to be going down in the near future until something actually changes in this whole entire thing. Of course, with how US is actually concretizing their support for Ukraine, I do think that this is going to be helping a little bit with the whole Ukraine's fight against Russians invasion. And at the same time, because of that, that's definitely going to be lowering oil prices a little bit, because it simply means that, this whole thing might not be as drawn out as we think. That's kind of the whole thought process behind everyone's mind. All right, so next up, we got COVID-19 cases rises in the US with limited impact. So for this, a new Omicron variant further infiltrated the US. A jumble of signals suggests the latest increase in the COVID-19 infection hasn't stopped a commensurate surge in severe illness, even as risk remains. I'm pretty sure they are talking about the BA.2.12.1, which is the newest subvariant. Let's see if they say it. This wave of COVID in the United States, blah, blah, blah. Fast mutating virus still poses, blah, blah, blah. Yeah, okay. BA.2.12.1. Wastewater levels nationwide have tripled since mid-March. So yeah, okay. I do think that this is, to a certain extent, a possible concern that COVID might be starting all over again. Okay, with this new variant, that at the moment we are still thinking that this is going to be on the verge of Omicron, definitely, because it's a subvariant after all. However, what we are more worried about is that this might actually spread faster than BA.2.12.1, which is definitely going to be a possible concern, especially with how China is actually being so protective of their whole entire, well, I won't say economy, I would say more of protective of their whole environment, because even when they have 20 people getting the virus, they immediately lock down the entire city to ensure that this virus do not continuously spread. So yeah, I do think that at a certain extent, like I said before, I do think that I think China is not stupid at all. I do think that China knows what they're doing. They might be more overprotective about their whole environment and this whole situation. So I do think that what they are doing, they might actually view it as politically and also environmentally correct. But of course, to the US, the EUs and such, they probably don't think that that's a good idea, because business should go on. And yeah, so I do think that you never know. The US might actually start to have second thoughts and say that maybe this whole thing needs to be looked over again. Maybe we have to adapt China's take on this entire new Omicron variant wave again. So yeah, it's going to be a little bit interesting for us to really see, especially with the case rising in US. I do think that that's going to be a strong point for us to really look into. All right, next up, we got Jerome Powell, Fed's set to go big and keep going until inflation is tamed. Fed expected to raise rate by half a point in May and June. Inflation could push Powell to signal restrictive policy ahead. So yeah, this is definitely going to be one of the biggest catalysts that I have in my video that I talked about. And the reason why is because if Jerome Powell comes out and say 50 basis point hike for the next two hikes, if you were to be well, I would like to say that's a little bit on the hawkish side of things. If he were to be that hawkish, and then immediately after he says something about the whole restrictive policy that he's going to be setting, where it's going to be ensuring that banks have enough money. For example, right now banks are allowed to have like 1% for collateral for them to actually loan out the money. So all banks that definitely have at least 1% of the money to ensure that they are able to do daily transactions and they are not completely cashed out. There is a possibility that Jerome Powell might say, all central banks or all banks in general needs to at least have 2.5% or 3% of their entire reserve in order for them to actually continue with any sort of transaction. What this actually means is that banks in general will need to be a lot more cautious with their spending. And when they are more cautious with their lending out of money, all the other businesses out there are going to be having a harder time for them to actually loan money. And then that's going to kind of extrapolate, and then businesses in general will start to become harder for them to actually go through with this whole sudden change in restrictive monetary policy. Okay, So yeah, Jerome Powell doesn't like to bless bets in financial markets, but he could shift the needle this week on how high investors expect the Federal Reserve to raise interest rates to cool overheated prices. Okay, want to lift rates expeditiously to a neutral level this year that neither stimulates nor restrain growth around 2.5% and then slow the pace of tightening, which is personally my own point of view as well. I do think that it would be better for them to actually increase the rates immediately to about one, like just increase it by 1 basis point, almost forcing a pseudo recession. And afterwards, if it actually forces a recession, give it back. And then you kind of keep on doing that. I do think that, playing with the market with a kind of a tug of war sort of deal would be bad for the market and also bad for Jerome Powell's name. But at the same time, I do think that that's going to be helping with the whole entire bringing the inflation rate downwards. I do think that that's going to be helping the most. So yeah, that's kind of my own thought on that. But in crisis, central banks that pause typically loses as the forces they're battling, be it spreading financial panic or broadening inflation, gain more momentum. You don't pause along the way in an inflation fight. You do look around, but there is an urgency of moving beyond a neutral rate of interest. So of course, these are the dovish members who think that but hawkish member thinking that you cannot just try to go up by 25 basis points and expect inflation to kind of come down, which of course, like we all expect that to be the case as well, because if you increase it by 0.25%, inflation is still at 8.5%. It's not going to be helping. And of course, if you actually increase by 0.5%, of course, you might think that it doesn't really sound like much. But if the subsequent month of CPI actually comes in at 0.4%, technically, we're actually going through a form of a deflationary trend because we are increasing the interest rate by 0.5%, and then the interest rate is going down by 0.4%. And that way, we are actually having a net loss of 0.1% of inflation. And of course, the more we actually do this, the more inflation slowly trickle down. And when inflation slowly trickle down below the, say, 4% mark, and then we'll kind of start to have the whole topic of how, okay, maybe now that we are down to the 4% mark, we can actually bring down our interest rates down to the 2% mark again, or the 1.5% mark again, also on and so forth. So yeah, it kind of makes sense from there on out. U.S. central bankers don't want to trigger a recession, and Powell has voiced confidence in the Fed's ability to pull off a soft landing that brings inflation towards its 2% target without stalling the economy. I do think that that is a little bit too much to ask for to pull off a soft landing without stalling the economy. I do think that you have to stall the economy for you to really go through with it. A soft landing when we are at 8.5% inflation doesn't really seem possible, but hey man, I'm not a Fed, so I'm not sure. If we determine that we need to tighten beyond the common measures of neutral and into a more restrictive stance, we will do it. And yeah, I do think that this is enough to really kind of scare the market a little bit. Right now, if I look at the SPY, okay, I don't think the SPY is completely spooked out by it either. Let me just see SPY. Can I get the SPY? Okay, the SPY isn't completely spooked out by it. The SPY currently is hovering around $413. QQQ kind of stalling around $314, which is the Nasdaq and S&P, respectively. So yeah, they're kind of up like 0.4% for the day itself. So I do think that because of course, what this was when this was actually said was March 21st, which was easily a month plus ago. I'm pretty sure that the market has pretty much already priced in this entire situation. But yeah, of course, people are still going to be talking about, like myself, I do have a different expectation going into this FOMC meeting on the 5th of May as well. So yeah. All right. Enough of this. Let's move on to the next news. The crypto industry. Can crypto go green? Major companies are trying, but it's easier said than done. I'm going to talk about very, very interesting news that I saw earlier this morning. Pretty cool. Okay, so I'm pretty sure a lot of your people who are interested in crypto probably know about the whole CRO situation. Okay, for crypto.com, they actually have a safe. I don't really call it a safe coin. A stable coin of some sort called CRO, and they basically peg it to a credit card and basically stake the CRO as you are using the credit card and such. So people kind of plowing money into crypto.com. Afterwards, something crazy happened. Okay, over here, look over here. Crypto.com flashes card rewards. CRO token dropped 11% as community reacts. Okay, of course, like I said before, I'm basically just reading from this headline itself. I'm not very sure. I do not invest in crypto.com, nor do I invest in CRO. I do not know what this is about, but I do have a basic understanding of what this actually happened. A lot of the staked rewards were actually a lot higher for CROs. That's why CRO at one point was at about $1.20, $1.30. Right now, CRO actually went all the way down to 33 cents. There are people who bought into CRO at 50 cents, 60 cents, even $1. Thinking that, those were good buying in prices. And afterwards, definitely, thinking that the rewards is definitely going to be outweighing the risk that you're going to be getting. And also at the same time, you're going to be getting a credit card. Okay, a very cool credit card, be it in blue, in green, in red, and black. Okay, cool credit cards. You can go out, you can spend money, you can get stake rewards on the CRO tokens. Okay, but nevertheless, ultimately, you then realize that stake rewards are not going to be there forever. Okay, which is why even for myself, I do stake Polkadot. I do stake. I stake Polkadot. I stake Terra Luna, UST. But I don't put a lot of my money into those. Okay, I only put like about 8% of my entire portfolio into those stake portfolio, because the thing is that, honestly speaking, if it goes, it just poof tomorrow, I'm gonna be a little bit heartbroken, but I'm still gonna continue with my life. Okay, and so I do think that I would like to imagine that a majority of the people who actually invested into CRO had the same mindset as I did. So for those people who actually bought in CRO majorly and lost out majorly, I do know of a few TikTokers who actually did so. I'm not sure. I have not really checked in on those people yet. That's going to be very, very bad for the crypto scene. However, I am going to be making a crypto video on Wednesday. I'll be making a crypto video on Saturday actually, because on Wednesday I'll most likely want to be talking about the FOMC meeting. The crypto video I'll be talking about on Saturday, which is going to be mostly talking about how the crypto market is for the past year or so. Because just because we talk about the stocks market a lot and you see a lot of declines in the stock market, the crypto market is also kind of bleeding out a little bit as well. So I do think that I want to talk a little bit more about the crypto market, give the crypto lovers some content as well. But yeah, that's basically all I have for today. I do think that the whole crypto side of things is gonna be a little bit dangerous. But I'll talk more about that on Saturday. But anyway, thank you guys so much for watching, and I'll see you guys tomorrow. Thank you so much for watching. Bye.